Friday was also a very interesting day because when I woke up Friday morning, silver was up over $1. Silver was at like $33, excuse me, $33 and like 30 cents, 40 cents. And so it looked like a real breakout, except the problem was it was only silver. Gold was only up about $4 or $5. So when I saw that, I was, it was a little iffy. And I thought, maybe there's just a lot of unwinding of these spreads because a lot of people, I think, have been long gold and short silver as a spread, thinking that, look, if gold goes down, silver will go down more. And if gold goes up, it's been going up more because the ratio has been moving in that direction. So rather than just being long gold, I'll be long gold and short silver. And in case the market goes down, I can make money that way too. But I think that it's been so stretched.
Good evening, and welcome to the Economy Express channel, your trusted source for breaking financial news, market insights, and economic analysis. Tonight, we bring you a major development that could send shockwaves through the precious metals market. If you've been waiting for silver to make its historic move, the time may be closer than you think. Renowned economist and gold advocate Peter Schiff is issuing a stark warning. A silver breakout is on the horizon, and those who wait may miss the opportunity of a lifetime.
Where the ratio has been more than 90-1. I was talking about this on the last couple of podcasts. I've been telling people, look, buy silver. And I still think that you should be buying silver over gold right now. Right? Even though I'm a gold bug, silver is really cheap in terms of gold. And so it looked like we were getting a unwinding of that spread. And I think that's what happened. But then as gold started to go down, it cascaded and gold went to down $45 and silver went from up $1.10 to unchanged. Right? I think it ended up the day flat. Now, it still was a gain in gold versus silver in recent times. If gold was down $45, silver would have been down $1, maybe more. Instead, it was flat. So I think there was some unwinding going on throughout the day, but that unwind caused gold to go down. People start getting bullish on silver. It's because gold and silver are going up. I think it's a much stronger bull market when you have silver leading the way. And I think maybe we're going to be entering that. So at this point, with silver still trading around $32 and gold, near, it's 2,900, even though it dropped $45, it's still barely below 2,900. In fact, it's up, it's up $13 right now on Sunday night. So it's just $28.95. We're only $5 below 2,900. Silver should already be above $50, given where gold is at a minimum. So for now, I would focus on it. And especially with the tariffs looming, there's been articles written and it's happening. They're not just writing the articles. They're writing about what's going on. But a lot of gold has been coming into the United States, a lot of it coming in from London. And the reason I think you're seeing a rush of imports is to get ahead of these tariffs, because the tariffs would apply to gold. And a lot of the gold that Americans might want to buy is going to be imported. America produces gold. We're the fifth largest gold producer in the world. Number one is China, right? They're pretty much number one in everything. Number two is Russia. Number three is Australia. Number four is Canada. And then the United States. If gold demand really picks up, which it should, we won't be able to meet it with our domestic production. And so we're going to need imports. Well, if there's a 25% tariff, who's going to want to pay 25% more for their gold? So the idea is, let's bring the gold into the country now so that we don't have to import it. Well, I would suggest the same thing for our customers at Schiff Gold, right? Don't wait to buy your gold after there's tariffs. That's the worst time to buy it. It's going to be tough. So if you want to have physical possession of gold and silver, buy it now, not only because the price is going to go up, but because the tariffs may go on. And of course, the gold.
So, what's driving this rally? Why is silver still undervalued? And how could looming tariffs, global debt, and monetary policies send precious metals skyrocketing? Stay with us as we break it all down. Silver's surprising move, a sign of what's to come? Let's start with Friday's explosive silver rally that had investors on edge. Early in the morning, silver surged past $33 per ounce, sparking excitement across the market. But something was unusual. Gold wasn't making the same move. Gold was only up a few dollars, raising questions about whether silver was experiencing a true breakout or simply unwinding from long-standing market spreads. The initial gains didn't hold, as silver eventually pulled back to $32, while gold slipped by $45 to settle just under the key 2,900 level. However, despite this short-term volatility, Schiff believes this price action is an early indication of a much larger move ahead. Why silver is still massively undervalued.
Imposes 25% tariffs on gold. Any gold coming into this country is going to be marked up by $25. Otherwise, it won't come in because nobody in Russia is going to sell gold to America for $1 less than they can sell it in Europe, right? The price is the price. And so if we want to tax Americans $25 to buy Russian gold, then they're going to pay $25, 25% more than what the Europeans are paying for the same gold. So the idea is to buy it now. And the same would be true with silver. Now, I guess if you're buying like junk silver, obviously that's not imported, but that's, when you're buying junk silver, that's a used product, right? By definition, right? You're buying it from somebody who's selling it. But if there's a 25% tariff on silver coming in, that's going to cause a big premium in junk silver because people buying junk silver or anybody who's buying, a used silver product that's already in this country, right? They're going to be able to charge more because it's not going to be competing with the new products that are being imported into the country. So the big guys, the institutions are trying to jump ahead and they're buying their metal now. I would suggest that, my followers, customers, Schiff Gold, do the same thing, except more so with silver, right? Buy your silver now. Maybe there'll never be tariff. Well, it's still cheap. You should buy it anyway. Even if you didn't have the threat of tariffs that were going to make physical gold and silver a lot more expensive, you'd want to buy it anyway. So now you got another reason, right? You can kill two birds with one stone. You can get into silver before the price goes up, and you can beat the tariffs. And if it turns out there are never tariffs, well, then you still did the right thing by buying it. And the fact that we did get this sell-off, it may have been off to the races on Friday. After it was up $1, maybe it would have gone up 2 or 3, and who knows? The fact that it came.
Silver has been trailing behind gold for years, but many analysts believe this trend is about to reverse. Historically, silver follows gold's lead in a bull market, only it moves faster and more dramatically once momentum builds. The gold-to-silver ratio, which currently sits at an astonishing 85-1, suggests that silver remains one of the most undervalued assets in the market today. For context, in past bull markets, this ratio has shrunk to as low as 16-1, meaning silver has a long way to climb to catch up with gold's performance. Schiff is adamant. Silver should already be trading above $50 per ounce given gold's current price levels. The longer this discrepancy lasts, the sharper the eventual breakout could be. The tariff factor, a price shock waiting to happen? But there's another major catalyst on the horizon that could make silver and gold even more expensive overnight. Tariffs. The U.S. is considering a 25% import tariff on precious metals, and the implications could be massive. Schiff warns that once these tariffs take effect, gold and silver imports will become significantly more costly for American buyers. Right now, we're already seeing signs that institutional investors are preparing. Massive shipments of gold are being rushed into the U.S. before the tariffs are implemented. Schiff urges individual investors to take the same approach. Buy now before the price jumps. If these tariffs hit, waiting could cost thousands of dollars per investment. The global debt crisis, a time bomb for fiat currencies. Beyond tariffs, another powerful force is driving investors toward precious metals, the growing instability of the global financial system. The U.S. national debt has now surpassed a staggering $34 trillion, with unfunded liabilities, like Social Security and Medicare, pushing the real figure well over $100 trillion. This kind of debt is unsustainable, and the government only has two choices: default on its obligations or print more money to pay for it. History tells us they will always choose inflation over austerity. That means the dollar will continue to lose purchasing power, and investors who fail to hedge with real assets like gold and silver will be left behind. Central banks are stockpiling gold. Are you? It's not just individual investors taking notice. Central banks worldwide are making aggressive moves into gold. China and Russia, in particular, have been steadily reducing their exposure to U.S. treasuries while significantly increasing their gold reserves. China's officially reported holdings stand at 2,300 metric tons, but many analysts suggest the true number is closer to 20,000 metric tons, a number that could reshape the global financial system. Russia, on the other hand, has quadrupled its gold reserves in the last 15 years. The message is clear. Global superpowers are preparing for a world where the dollar is no longer king and gold plays a central role in monetary reserves. How high can silver go? A look at the bigger picture. The question on every investor's mind: how high can silver go? If gold reaches $5,000 per ounce, historical trends suggest silver could climb to $100 per ounce. If gold hits $10,000 per ounce, silver could explode to $200 or more. These are not wild predictions. They are based on the same market cycles that have played out multiple times in history. In the 1970s, silver skyrocketed 800% in just a few years. In the early 2000s, silver remained suppressed for years before breaking out and nearly tripling in price in under 12 months. The conditions today are eerily similar, if not even more extreme. Final warning: the time to act is now. So, what does all of this mean for investors today? Peter Schiff's advice is simple: the time to buy is before the breakout, not after. If history is any guide, once silver crosses the $50 per ounce mark, finding physical silver at reasonable prices will become increasingly difficult. We are already seeing shortages in certain bullion products, and premiums on physical silver are rising, signs that demand is beginning to outstrip supply. The next phase of this bull market will likely be marked by rapid price moves, increased difficulty in acquiring physical metal, and a shift in how the world views gold and silver as financial safe havens. Closing remarks. Investors, the message is clear. The world is changing. Global debt is spiraling, central banks are stockpiling gold, and silver remains one of the most undervalued assets on the market. The question is, will you take action before the breakout, or will you be left chasing higher prices? Let us know your thoughts in the comments below. And don't forget to subscribe to the Economy Express channel for more real-time updates on gold, silver, and the forces shaping the global economy. Until next time, stay informed, stay prepared, and as always, invest wisely.